Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is testing a quite significant level of monthly demand and support. In fact, from here, all these previous rejections to the upside were created. Every single time the market tested its zone, it got rejected to the upside quite aggressively. And what we can see here is that the market is currently approaching the exact same zone. So what we could expect here is a deeper test of this support area and then to get a potential rejection to the upside, as really happened every single time when the market tested this zone. Now, if we zoom in closer, what we can also notice is that in creating this move to the downside, the market is also currently printing this M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside for the completion of the pattern at the neckline, which in this case would be the previous support turned resistance. So if we go here on the chart, we can notice that if the market here will create a bit more bearish price action, we can then at that point expect a rejection to the upside, at least for the completion of the M pattern at this previous support and resistance. But overall, we could expect more bullish price action to be created and the market to break above the neckline, because as we just said, if we look at the previous historical reactions of the market to this level, we can see how every single time it got rejected to the upside quite aggressively. So we could expect some short-term bearish price action and then a longer-term bullish continuation. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see how the market at the moment is trying to break below a quite significant level of previous weekly support, which as we're now breaking it to the downside, we could expect the market to now respect it as resistance and continue lower. So also from a weekly perspective, the market is currently breaking below support, and it seems like there is the possibility to see some short-term bearish price action and then to see more bullish continuation. Now, also here on the weekly time frame, if we are to identify the structure level, we can see how this is the zone that was acting as previous support, turned resistance here, again acted as resistance, then got broken to the upside, and at that point started acting as support. This is the level that we could expect this market to test and then potentially to reject to the upside. And this aligns perfectly with the zone that we have already identified from a monthly perspective. So also here on the weekly, we could expect short-term bearish price action and then longer-term bullish continuation. Dropping down on the daily time frame, what do we see? Now, I did speak about EURUSD a few days ago. When the market was at this level, I explained all the reasons for which we could expect this impulse to the downside. And then again, after this move lower that we wanted to see, I made another full breakdown explaining all the reasons for which we could expect first this correction, and then from here, the creation of a new lower low, which again is exactly what the market gave us. And by the way, I will link in description those previous analysis so you can go and check them out for more free education. Now, what we can notice at the moment is that we do have some structure support here from a daily perspective at this level. In fact, from here, this previous correction started, and at the moment, the market is testing the same zone. So until the market will remain above this support, it could easily get rejected to the upside. Therefore, what we would need here is a potential break below the support. Only if we get a break below the support after the break on the retest of the previous support and resistance, that is where we would have good probabilities for a potential rejection to the downside away from the area. And that is essentially where we would have very good probabilities to see more institutional shorting inside of the zone, at that point further increasing the probabilities of a potential move lower. Now, why do I speak about institutional shorting? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what the non-commercials, so the biggest speculators in the market are doing, which are hedge funds, and we check the data for the euro, the first thing that we have to keep in mind is that if you're checking the data for the euro, you're actually already checking euro USD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we went from 178.8k net positions all the way down to only 101.9k net positions, with 6.1k shorts added with the last report and 4.9k longs getting closed. So Euro USD is currently getting quite weak, with shorts increasing from 68k to 105k and longs getting decreased from 264k to 207k. So institutions are definitely moving to the bearish side of the euro. So to recap, until the market will remain above this support, it can easily continue higher. However, if we get a break below the support after the break on the retest of the previous support and resistance, this is an area inside of which we have the possibility to see more institutional shorting at that point, further increasing the probabilities of a potential move lower. And since we will have the impulse and correction at that point, this would be a confluence of resistance area, because by taking our Fibonacci from the high to the low, we will have either a 0.32 or a 50% retracement also lining up inside of the area, further increasing the probabilities of a potential rejection to the downside. So how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that we need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join before the offer expires and price goes back to normal is starting to finish. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible at transparentfxtrading.com. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.